Learn the art of investing on Moneywise.
Hello and welcome back to the Moneywise Podcast, brought to you by Bandhan Mutual Fund. I'm your host Mishuk. Today we are diving into something that's gaining serious traction, index-only portfolios. And I'm joined by Sooraj Raveendran, founder and CEO of index fund Sahi hai. He's someone who lives and breathes this space. Sooraj brings over 18 years of experience to the table, along with a powerhouse team that collectively brings 40 years of wisdom. His mission is clear: to make index investing simple, low cost, and practical. So, Sooraj, it's really great to have you here. Welcome to the show.
Thank you so much.
Great. So, let's start with the basics. What exactly is an index only portfolio, and why might investors consider building one?
Okay, so let me explain you a brief about what is indexing or an index fund first, and then I'll explain you what is index only portfolio. So it's an investment approach where you're buying all the listed business in India or the world. That's called indexing. In theory, it's actually you're buying 1% of, you're investing into 1% to each stock which India have. But when you look at a fact sheet like Nifty 50, the allocation based on the free float market cap. So I'm not getting into technicals. This is what an index fund. Now, what is an index only portfolio? It's nothing. You're actually building a portfolio using only index linked products. Now, there are three reasons why might investor consider building one. One is there is performance issues in across mutual funds. Two, as per the SEBI regulation, the TER of an active fund is about 2.25%. I'm talking about the maximum limit. And an index fund maximum limit is 1%. Even if you consider this maximum limit, straight away 1.25% of saving. In reality, the Nifty 50 index fund, you can, as low as 0.20. So the cost also matter a lot. So that's the reason we recommend the people to build an index only portfolio.
That's a really solid starting point, and I think the clarity that you brought in helps a lot, especially for people who are overwhelmed by the number of options out there. So moving on to the next question. How should someone, think about asset allocation within this setup, like across equity, debt, and even international exposure?
So you have to start with the big picture, which is equity and debt. Okay. Then you can add gold. See, there is a wide range of products available in index funds, whether it is debt, commodities, even equity, you have wide range. So my straight advice to people is young investors should as good as 90-10, 90 in equity, 10 in debt or other asset class. Retired people can go with 60-40. Okay. Even in retirement, someone can have a 20% allocation equity because it's all depends on the annual withdrawal rate. Because in retirement, people withdraw money. In our calculation, if you withdraw just 3.5% per annum, and then even keeping 90% equity in a retired portfolio is complete indexing possible.
Right. So if I sum that up, it's not just about being in equities, but rather having a right mix.
100%. I mean, what happens, let's say you made a 60-40 portfolio, 60 into debt, other asset class, and equity of 40. And then you start withdrawing 8%. If you do a complete calculation, backtesting data, your portfolio will not survive for not even 20 years because the withdrawals are so much. So the withdrawal rate should be less. That's about the retirement side of portfolio.
Right. So moving on to the next question, within equities, how can investors diversify, using broad-based index funds like large cap, mid cap, and small cap indices?
So within equity, you can diversify across market cap. Even you can add styles. So we call as core and satellite portfolio. The core portfolio is broad-based index like Nifty 100, mid cap 150. And the satellite can be a thematic, sectorial, or maybe factor-based indexes, which is smart beta. So standard terms, we do 70-30. There is an advanced approach available, which is we call as risk parity approach. कभी कभी क्या होता है क्लाइंट का रिस्क के हिसाब से आपको पोर्टफोलियो अलाइन करना पड़ेगा बिकॉज इट्स ऑल अबाउट क्लाइंट नीड्स इट्स नॉट व्हाट इज गुड और बैड so risk parity model is there then we can have a multi-dimensional model to build a passive only portfolio ये सब अप्रोच से हम लोग डाइवर्सिफाई कर सकते हैं
Since you mentioned the thematic and sectoral funds,
Yeah.
so
Yeah.
where do thematic and sectoral index funds really fit in? Like, should they be used to enhance returns or as part of core allocation?
No. Absolutely no. It cannot increase the return in long term. I'm very, very sure. Because it has high correlation with a broad-based index. Example, if you're investing Nifty 50, you are already have 33% allocation towards banking. Now, having a thematic or a sectorial fund will not make any sense. So if the client mandate from the client side is a mandate from the client, then you can use as a satellite allocation, which is standard allocation for us is about 30% the total allocation can have some thematic. It's not necessary actually.
Right. So I think that was a great distinction, but let's deep dive a little bit further into this. When it comes to factor-based index funds like the low volatility, momentum, alpha, value, all of these can feel a little bit technical. So how
Yeah.
should investors approach them?
Yeah. So there are myths. So first of all, these are very different than an active mutual fund or a individual stock picking because these factors are well-researched, data-driven funds. I mean, I'm saying most of this research are done by some of the Nobel Prize winners, Stanford, Harvard, the research. Okay. And these are very long-term history of these funds internationally. But there is a conflict. So when you say passive business, no one can say that you're beating an index. So it's a mix of passive active, number one. But we do recommend this kind of a masala over the main dish with equity allocation. It's give you some flavor, some short-term performance. So yeah, you can have some factors like low volatility may going to help some retired people to have a low vol portfolio. Quality is something which somebody want to build a quality based portfolio. These are helpful. But your core allocation should be broad based.
Since you gave that analogy that it's the masala on the top,
Yeah.
so I'd say that you really made that digestible.
Yeah.
Especially for someone who's new to the
100% ये तो
idea.
उल्टी हो जाएगा.
So if someone wants to start building an index only portfolio today, what's
Yeah.
a simple or practical way to begin?
See, any investment first step is to have an emergency fund, and whether you are building a passive, active, whatever portfolio, that is first step in your life. Because if you don't have liquidity, you cannot invest in equity because आप withdraw कर दोगे. All this methodology सब कोई काम का नहीं है. Okay. So first is an emergency fund. Start that emergency fund. Then for long-term goals like education, retirement, and other thing, you can start with the total market index, which have everything. Or you can start at least with Nifty 100. That also cover a sufficient market, the capturing about over 66% of the market. And then gradually move into asset allocation, advanced indexing products, and so on and so forth.
That was really, I'd say, practical because sometimes the hardest part is just knowing where to start.
Yeah.
You've laid out quite a clear roadmap. So
Yeah.
we are almost at the end of our conversation. But
Yeah.
before we wrap up, Suraj, what would be that one key piece of advice you would give for somebody who's looking to commit into an index only approach for the long run?
Long run. Because see, people are not looking at data. I mean, I think there are well-researched documents available which confirm and prove that there is a different approach requirement. There's a different approach required to build portfolios, which I think we should read that because it's a hard-earned money you're investing, and there is a chance you can save little more by following indexing. So I think these are the things which one should look at.
Right. I must say, Suraj, this has been a really insightful conversation. And thank you so much for helping our listeners understand that building an index only portfolio isn't just possible, it's actually quite smart when done with the right plan.
Yes,
So,
yes.
so to our listeners, if you're looking for a low maintenance, cost effective way to invest, this might be the strategy you've been waiting for. We'll be back with more practical insights to help you invest with confidence. Until next time, stay curious, stay consistent, and stay money-wise.
You're listening to Moneywise, brought to you by Bandhan Mutual Fund. Check out the rest of our series for more insights on investment and personal finance. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.